Let me paint this quick scenario. Picture your child as 18, not requesting for school fees, not depending on you for help, but logging into a portfolio you have quietly built over the years and seeing stocks that you have bought 20 times, 50 times, 100 times more than its initial value as at the time you bought them. That is the power of penny stocks when you buy them early. Because those penny stocks that look cheap today will be far beyond reach by the time they are grown. So it's not about an instant wealth. It's about you sowing seeds of abundance and letting time nurture them on behalf of your children. So in this video, I'm going to walk you through how to build your children's legacy portfolio using penny stocks. It doesn't matter how much you're starting with, all you need is consistency. So of everything you're going to learn into this video, the last framework I'm going to be talking about may just be that inheritance that your child is never going to forget. So before I go into that, what exactly are penny stocks? So think of penny stocks as newborn in the stock market. They are like tiny seeds that over time grows into what looks like a stalk, and before you know it, it grows to become a full-blown tree. So they are low price shares, usually below 10 naira. So when you see a stock that is below 10 naira in the stock market, then you know that it is a penny stock. Many of the penny stocks belong to companies that are still in the early growth stages. So you're not just buying based on what they have now, you are positioning yourself for what they will become in the nearest future. Now, that's not to totally ignore their current fundamentals, but one way or the other, this shows that you believe in the company and you're ready to wait for them until they grow from this to this. So as your child grows, the stock also matures along with them. So now let's mention some of the blue chip stock right now that were once penny stocks, and we have seen them grown from penny stocks to become blue chip stocks that everyone is running after now. We have the likes of NACO, Presco, UBA, and quite a number of them. Time has rewarded those who bought the stock. That is why you're buying for your children, because just like I said, that as your children go, these stock also mature with them. So by the time your children are 15, 18, 25, they already have a leverage. You have built a legacy. You have left a legacy for them that will keep you in their memory. So when you buy these stocks, it's not for quick gains, it's for the future. Very quickly, I'm going to show you the strategy you're going to deploy when you want to buy these penny stocks. So the strategy you want to deploy when you're doing this is to diversify. What do I mean by diversify? When you want to buy these penny stocks, don't go ahead and buy 5 stocks in the same sector. Say for instance, insurance sector. You don't want to buy 5 different stocks in the insurance sector. What you want to do is diversify across sector. Think banking, think oil and gas, think consumer goods, think healthcare. Think of buying across different sectors, not the same sector. The reason for this is because if you buy in a single sector and anything goes wrong, it's going to affect all your stocks. But if you buy across different sectors, even if there's a government policy or a macroeconomic event that happens and affected a particular sector, it's not going to affect all the stocks you have bought. It's just going to affect one of the companies. So diversify, buy across sectors. Another one is accumulate. You don't want to buy a stock that's under 10 naira and buy 1,000 units. If you buy 1,000 units, let's say at 10 naira you bought 1,000 units, which is what? 10,000 naira. Now by the time you do this, if after 5-10 years this stock had risen, let's say 10 times, the value of 10,000 that time will now be 100,000. You wish you bought 100,000 units, you wish you bought 1,000,000 units, you wish you bought 10 million units. So when you're buying penny stocks, you want to accumulate. Think of buying 100,000 units, 1 million units, 10 million units, depending on your capacity. Now you don't have to accumulate all the units at once, but you can continue to top up depending on the strategy you choose to use. So if it's something you want to do monthly, you can continue to top up every month until you accumulate the desired units you really want. Another one is don't buy this type of stock with an emergency fund. Investing for the future is not an emergency. So you want to buy with a long-term fund with you. You know that this is typically for the long term and not for the short term. Now, that's not to say that you will not get an immediate reward or a short-term reward, but your goal is the long term because you're building generational wealth and you're building legacy. Another one is hold. The most important virtue when you're investing in stock is patience. So what you want to do is Be patient. 6 months, 1 year, 2 years, you might not have the reward you want. This strategy has to do with patience, it has to do with time. So allow time to take its course before it rewards you. And another one is stay disciplined. Don't invest once and forget about your investment. Stay consistent. Invest from month to month. Keep building the portfolio until you get your desired units. Now, another one is monitor the fundamentals. Let's say you bought a stock at, let's say 7 naira, and the price drops to 6 naira. It doesn't mean that the stock is no longer a good stock to hold. Check the fundamentals. After checking the fundamentals, if the fundamentals are still okay, then buy the dip. So it doesn't matter if it's dipping, buy the dip, buy more, because it's just an opportunity for you to accumulate more of that particular stock. Now, another one is compound. Now, what do I mean by compound? Most of these companies are going to be mentioning, they pay dividends. So when they pay you dividends, it's not the time to eat your seeds. It's the time to plant the seeds and allow it to grow more fruits. So when the dividends come in, it's not the time to spend it. It's the time to plow back the dividends and buy more units of that stock. So with that, you're able to build your wealth faster and you delay gratification. So you are building inheritance, not hype. So you need structure in everything. So let's take a look at these penny stocks, how they have performed in the last 5 years, in the last 3 years, and even from the year to date. Now, mentioning some of those companies in no particular order, I'm going to start with Chance. Chance belongs to the high city sector, and this particular company has been around for a while. But you agree with me that ICT in the current age is now different from what it used to be, which means there is still more prospect in the high city sector. Just looking at the prices in the last 3 years, 3 years ago, this particular stock was selling for 22 kobo. Now it's selling at 3 naira 6 kobo. That's over 10 times, like more than 10 times the amount. So which means that if you have invested 220,000 naira to buy a million units, now it's going to be worth a little above 3 million naira. So that's the power of being patient in the stock market and buying early into some of the stocks basically because of the future. Another one I'm going to talk about is TIP. That's the Niches PLC. It belongs to the waste management sector. 5 years ago, this stock was selling for 52 kobo. 3 years ago, it was selling at 48 kobo, which means that there was a drop from 5 years to 3 years, and we had some people that held on to this stock. But what are we talking about? As at the beginning of this year, it sold about 2 naira 70 kobo and currently is selling at 12 naira 50 kobo. So you wonder, why did I list this particular stock as a penny stock? Because a penny stock is supposed to be a stock that is under 10 naira. Because currently there is a public offer for this stock which is going for 9 naira 50 kobo. So which means if you take advantage of this public offer right now, you already have a 3 naira profits just because you're taking advantage of that public offer. So if this is something that you like to take off, I'm going to leave a link in the description on how to fill the public offer form. I want to go through it and do that before the deadline of the submission of the public offer. So let's continue. This stock between the last 5 years and now has done over 1000%. Look at what happened 5 years ago and what happened 3 years ago. There was a drop in the price from 52 kobo to 48 kobo. That is why when you are deploying this type of strategy, you don't put the funds that you're expecting an immediate return from. You're putting in funds that you can allow to let them sit until you get your desired results. So look at the results from 5 years ago now to what we have now as we speak. Look at what we have here from 22 kobo to 3 naira. Now let me take you through other sectors. Now let's go into the banking sector. One of the stocks you'll find as a penny stock in the banking sector is Jaiz Bank. Let's take a look at what has happened in the past 5 years till date. If you take a look at the price of this stock 5 years ago, it was selling for 65 kobo. 3 years ago, it was selling for 92 kobo, and currently this stock is selling for 4 naira 65 kobo. If you look at what has happened over the years, you see that from the previous years, it looks like there's no significant change in price. But as the year grows by, just like you're compounding, between 5 years and 3 years, there was a little growth. We can see that in the past 3 years and now, there is significant growth from 92 kobo to 4 naira 65 kobo, which means if you had a million units of this, it will have been 920,000 naira, but currently it will be worth 4.65 million. So that's the power of positioning yourself before the market realizes it. And however, this particular stock is not even done. So which means that you still have the opportunity to position yourself now if you so desire to. Now, if this video has been useful to you so far, I want you to tap on the like button and help me share so that other parents can see this. Don't forget to subscribe and activate the notification button so you don't get to miss future insights I share in my videos. Now, let's proceed. So let's take a look at the corn oil. That's the insurance sector. 5 years ago, it was 32 kobo. 3 years ago, it was 67 kobo. That's just about 100% in 2 years. But if we look at what happened in the last 3 years, it has moved from 67 kobo to about 4 naira 30 kobo. So you can see what time can do when it comes to penny stock. Like I shared earlier, I shared some companies that were penny stocks, and currently they are now blue chip stocks that everybody is running after. But we have people that positioned themselves way back then, and now they are reaping the rewards. In fact, some are earning dividends the price of the shares they brought them. So for instance, let's say someone that bought Jais Bank at 65 kobo and is still holding on to that share. A time will come where Jais Bank will begin to pay 2 naira as dividend. So which means that you are getting dividend higher than the price that you bought that particular share. Now, that's the power of positioning yourself early, because these companies are mentioning, they pay dividends. So you're not just looking at capital appreciation alone, it's both capital appreciation and dividends. So imagine having corn oil, a million units of corn oil at 320,000 naira. At a point in time, corn oil is now paying 2 naira as dividend. For a stock that you bought at 320,000 naira, you are getting dividend of 2 million naira. Now, that's the power of positioning yourself when it comes to buying dividend stocks, especially for your children. You're building a legacy already. You're building generational wealth, and your children will thank you for this. Now, the fifth one I'm going to be talking about is UPDC rates, and this belongs to the real estate sector. If you missed out on my video where I talked about REITs, I'm going to drop a link in the description below. So you want to watch that video on REITs, that's Real Estate Investment Trust. Now, coming back to our UPDC rates, 5 years ago it was 5 naira 50 kobo. 3 years ago it was 3 naira, which means there was a significant decrease in the price. Now, one thing I need you to know when it comes to penny stock is that penny stocks are volatile stocks. And by volatile, I mean that it can easily gain the same way it can easily lose in its share price. And that's because they are cheap stocks, so it's easy for people to buy them. And one thing I need you to know when it comes to the stock market is that for the price of any share to move, all you need to do is buy 100,000 units of that share. Now, buying 100,000 units of any of these prices, the highest you can have is 700,000, which is quite easy and affordable. Unlike when you have a stock like Presco that is 1,450 naira, and you want to accumulate 100,000 units of it, you will need 145 million. Now, just in case you didn't get my analogy, for this 7 naira price to move from 7 naira to another price, now in the stock market, a company can only gain either 10% or lose 10% in a trading day. So which means that, let's say this particular stock at 7 naira can only lose 10%, which means at the end of the day, the least it can go is 6 naira 30 kobo, and the highest it can go is 7 naira 70 kobo. Just in case you are just hearing that for the first time. So it can only lose 10% and it can only gain 10%. Now, if there is somebody coming into the stock market and the person is the last to buy and is buying up to 100,000 units or more at this price, then the price changes for that day. Now I'm giving you real lessons there. So that's why you have changes in price from day to day, because 630,000 naira is affordable, 770,000 naira is still affordable. So it's easy for the prices of these penny stocks to change in the market because people find it quite affordable. But it's not easy for an individual to just come with 145 million and change the stock price of a stock like Presco. So that accounts for the volatility when it comes to penny stocks. So it can easily gain as well as it can easily lose its price in the stock market. That was a little digression just for educational purpose for you to know what is happening in the stock market. So 5 years ago this was 5 naira 50 kobo, 3 years ago it was 3 naira, which means there was a serious loss. But now as we speak is 7 naira, and there's still prospects in this particular stock. Now, one of the reasons why this stock is not moving like other stocks I've mentioned is because the RITS has to pay about 90% of their profit to their shareholders. So this year alone, UPDC paid 50 kobo to their shareholders. So which means that if you had 1,000,000 units, they paid you 500,000 naira. Now, the other time when I was talking about not eating your seeds and the power of compounding, it means that 500,000 naira now you have to come back and increase your units with UPDC. Increase what you have there so that the next time they are paying you dividends, it will have moved from 50 kobo, from 500,000 naira to a bigger amount. So note that UPDC is not just for capital acquisition alone, it's also a dividend paying stocks. The penny stocks you can buy are not limited to the ones I've mentioned. There are still other sectors and other penny stocks in different sectors. You want to do your analysis and know where to position yourself. However, if you want many more stock recommendations, not just on penny stocks alone, on other growth stocks and blue chip stocks, we've made provision for that because your children's portfolio should not just actually be filled with penny stocks alone. It's just that because they are young, it can have a reasonable number of penny stocks. Then you balance it with some growth stocks and some blue chip stocks also. If you'd like to know more about the stock market, how to get started, how to do your analysis, we already have a detailed course on that. All you just need to do is check the description below. I'm going to leave a link in the description below. Just take the course and that qualifies you to be on our WhatsApp group because you can't be on the WhatsApp group if you don't have a level of knowledge. So with that, you can ask for stock recommendation even on the group, but it goes for a token just to show that you're serious and you're committed. Now, back to leaving a legacy for your children. Your children may forget your clothes you bought for them. They will forget the toys you bought for them. They will forget some of the parties, but they will not forget a portfolio that matures with them. That memory will never fade. You don't need millions to start. What you need is consistency. What you need is time. What you need is patience. And this is how legacy begins. You are handing down value, not trends. Foundation and structure always win. So let time take its full course because wealth doesn't announce itself in 1 year. It whispers quietly in the background and roars loudly when patience is honored. Let me leave you with this food for thought. Are you going to hand over generational patterns or you're going to hand over generational wealth and legacy? See you in my next video and stay blessed.